Two big retailers sinking on disappointing earnings results here. Lululemon's guidance missing analyst expectations, and also Nike seeing weakness in China, sales slowing in its holiday quarter. You can take a look at Lululemon off just about 13%, Nike off about 6%. Aneesha Sherman, Bernstein senior analyst, joining us now on this. And Aneesha, you cover both of these stocks. Let's start with Nike. I believe you just reduced your price target there on Nike. When you take a look at this report, weaker margins, sales are expected to decline here in the first half of the fiscal year. What's pressuring those sales in the near term?
Nike is doing something different than what it's done in the last couple of years, which is the good news is it's doing a lot of new innovation. But unfortunately, what that means is older versions of those products, so for example, an older version of a Pegasus or an Air Max that are still in the market, they're cutting those in distribution. And so the innovations are coming in. They're expected to come in over the next year, which is great. But while those are still ramping up, some of the older products are now being cut out of distribution to sort of clean up the market and avoid cannibalizing the new product. And that is what's going to drive some sales declines for a couple of quarters before the new innovation can start to drive sales again.
And Aneesha, I mean, this has been a story too, but Nike has been a story about execution. But I'm wondering specifically with respect to China, and just let's focus on that for a second. Nike's in a transition period, so they got a bit of leeway here. If you're the CEO, CFO, just how are you thinking about China right now?
Yeah, it's more macro pressure than Nike issues in China at the moment. I mean, Nike had its fair share of problems back with the Xinjiang cotton boycott in 2021. And then, of course, the lockdowns in 22. But right now, Nike in China, within the sportswear context, is doing very well. It's gaining share. It's doing well with consumers. There are no inventory issues. Retailers like it. Our channel checks are positive. The challenge is just the Chinese consumer doesn't want to buy a lot of discretionary product right now. They're under economic pressure. And so it's not really a Nike issue. It's more a China issue, which, of course, impacts Nike. But I think it's more, I feel more confident about Nike's prospects in China. And when macro improves, so will Nike.
I mean, when we talk about the product transition right now, the focus on the product innovation, also the wholesale reinvestment, what does the timeline look like for that in order to pay out and start seeing some improvement?
So Nike is guiding for another 3 quarters of sort of flat to negative growth while it cuts allocations of existing products and starts to put out these new products. And then starting in calendar 25, so which is Nike's back half fiscal 25, they are expecting to get back into growth. Because by then, these new innovations will have scaled up and will be driving real growth. And they would have cleared out some of the existing products from the long tail of product assortment that they have at retailers and on their own site. So about 3 more quarters, which means we have to wait 3 more quarters to see growth.
I want to shift gears to Lululemon. Got to talk about that as well. Strong results, strong reaction, at least in the stock market, too, about this. But I guess some of the other analysts were warning about the current environments. Fourth quarter is strong, but there's some trends month to date that seem to be troubling some analysts. I'm wondering if you can comment on that.
Yeah, the trends recently. So holiday was very strong in December, and that's what drove the strong Q4 performance. But year to date in January and continuing into February and early March, the trends have been very weak in the U.S. market in particular. And management talked about this on the call yesterday. They said there's some challenging U.S. consumer dynamics. Traffic is slowing. Conversion is slowing. I think it's a combination of macro. I mean, the middle income consumer is getting squeezed right now, and that is the Lulu consumer. But it's also Lulu's getting really big in the U.S. It is the #1 market shareholder in women's apparel. And you can't keep outgrowing the market once you're the market leader. And so a little bit of that slowdown that was overdue is finally caught up to the stock.
Aneesha, is some of that slowdown a bit surprising to you, given the fact that high-end consumer has held up so strong up until this point, and Lulu hasn't really seen much of that pressure before?
But I think the key in what you're saying is up until this point. Yeah. We are seeing weakness in the high-end consumer now, where other premium brands, if you talk about Nordstrom, you talk about Coach, you talk about Kering, they are seeing weakness in that consumer, which is the Lulu consumer. So it is not just low-income pressure anymore. It is really creeping up the income spectrum and is hurting that Lulu consumer in a way that it wasn't a year ago.
Aneesha, since we're kind of in between earning periods right now, any thoughts on trends that you've seen develop over the last quarter, heading into the next one? What are the kinds of things that are on your radar right now?
We're seeing continued softness in the U.S. market and consumer. Once we get to the summer, I think we will start to anniversary some of last year's softness, so we should see some incremental growth, and particularly for the sportswear brands who are seeing some big sporting events coming up, the Paris Olympics, the Euro Cup and soccer. That should drive some traction as well. So H2 is looking more optimistic than H1. H2 order books are stronger than H1, and H2 inventory levels will be cleaner than H1. So it does feel like it's a bit of a year of two halves where we're still in the thick of the H1 weakness, but things will start looking better as we get into mid-year.
Aneesha, what do we need to see from Lululemon to spark some of that reacceleration of growth?
I think we need to see some growth in the men's business. So this has been a big growth area for them, which was meant to be, helping to offset some of the slowdown in the core women's business. But men's has actually underperformed women's this year. And, Lulu's CEO on the call yesterday talked about how men are a little bit more conservative with buying as well. But he also talked about new innovation that they have out. They have new men's pants, new men's shoes. So if we see that starting to work and the men's business starts picking up, that may offset some of the weakness in the women's business as it starts to mature and slow, which will be a positive catalyst.
Now, our colleague Brad Smith, very excited about the new lineup of men's shoes over at Lululemon. All right, Aneesha, Sherman, always great to talk to you. Thanks so much for joining us here. Bernstein, a senior analyst. Thanks, Aneesha.